Hey everyone, welcome back to the 4 Credit Guys channel. Today we're diving into a topic that's crucial for anyone looking to break into the world of finance: securitization. Specifically, we'll be tackling some of the top analytical questions you might face in a securitization interview. Whether you're a finance major or just curious about this complex but fascinating field, this video is for you. So let's get started. Question 1. How would you analyze the credit risk of a securitization deal? When it comes to analyzing the credit risk of a securitization deal, there are several key factors to consider. Underlying asset quality. Look at the credit scores, payment history, and default rates of the assets being securitized. For example, if it's a mortgage-backed security, examine the borrower's credit profiles. Historical performance. Analyze how similar assets have performed in the past, especially during economic downturns. Diversification. Check if the asset pool is well diversified across different regions, industries, or borrower types to minimize concentration risk. Originator's track record. Evaluate the reputation and historical performance of the company originating the assets. Structure of the deal. Examine the tranching structure, which determines how cash flows and losses are allocated among different classes of securities. Economic factors. Consider current and projected economic conditions that could affect the performance of the underlying assets. Legal and regulatory environment. Understand the legal framework surrounding the securitization and any potential regulatory changes that could impact the deal. By thoroughly examining these factors, you can get a comprehensive view of the credit risk associated with a securitization deal. Question 2. What metrics would you look at to evaluate a securitization transaction? When evaluating a securitization transaction, several key metrics come into play. Weighted average coupon, WAC. This is the average interest rate of the underlying assets weighted by their principal balances. It gives you an idea of the overall yield of the asset pool. Weighted average maturity, WAM. This metric shows the average time until the underlying assets mature, weighted by their principal balances. It helps in understanding the duration risk of the securitization. Loan-to-value ratio, LTV. For asset-backed securities like mortgage-backed securities, this ratio compares the loan amount to the value of the asset. A lower LTV generally indicates lower risk. Debt service coverage ratio, DSCR. This measures the cash flow available to pay current debt obligations. A higher DSCR suggests a better ability to service debt. Default rate. The percentage of underlying assets that are expected to default. This is crucial in estimating potential losses. Loss severity. The amount of loss on a defaulted asset after all recovery efforts. This helps in calculating expected losses. Prepayment rate. The rate at which borrowers pay off their loans earlier than scheduled. This affects the cash flows and returns of the securitization. Excess spread. The difference between the interest earned on the asset pool and the interest paid out to investors, minus servicing fees and other expenses. This serves as a first line of defense against losses. Credit enhancement levels. The amount of structural credit protection provided to different tranches of the securitization. By analyzing these metrics, you can get a comprehensive picture of the securitization's risk-return profile and its potential performance under various scenarios. Question 3. How do you determine appropriate credit enhancement levels? Determining appropriate credit enhancement levels is a critical aspect of structuring a securitization deal. Here's how you might approach it. Historical loss analysis. Start by examining the historical performance of similar asset pools. Look at default rates, loss severities, and timing of losses over various economic cycles. Stress testing. Apply various stress scenarios to the asset pool to estimate potential losses under adverse conditions. This might include scenarios like economic recessions, industry downturns, or specific events relevant to the asset class. Rating agency criteria. Consider the requirements set by rating agencies for achieving desired credit ratings for each tranche of the securitization. Investor expectations. Take into account the risk appetite and return requirements of potential investors in different tranches. Cash flow modeling. Use cash flow models to simulate how different credit enhancement levels would perform under various scenarios. Structural features. Consider other structural features of the deal such as excess spread, over-collateralization, and reserve accounts, which can act as forms of credit enhancement. Regulatory requirements. Ensure that credit enhancement levels comply with any relevant regulatory requirements or guidelines. Cost-benefit analysis. Balance the cost of providing credit enhancement against the benefits in terms of improved tranche ratings and marketability. Comparable transactions. Look at credit enhancement levels in similar recent securitization deals as a benchmark. The goal is to provide sufficient credit enhancement to protect investors in higher-rated tranches from expected losses, while still creating an economically viable structure for the issuer. It's an iterative process that often involves balancing multiple factors to arrive at the optimal levels. Question 4. Walk me through how you would model cash flows for a securitization. Modeling cash flows for a securitization is a crucial step in analyzing and structuring these transactions. Here's a step-by-step approach. Input assumptions. Start with the characteristics of the underlying assets. By principal balances, interest rates, maturities. Include assumptions for prepayment rates, default rates, and loss severities. Factor in the structure of the securitization, e.g., tranching, interest rates for each tranche. Generate asset cash flows. Project monthly principal and interest payments from the underlying assets. Adjust for expected prepayments using a prepayment model, e.g., CPR, conditional prepayment rate. Apply defaults and losses. Model expected defaults over time. Apply loss severity assumptions to defaulted asset. Reduce cash flows accordingly. Allocate cash flows. Distribute incoming cash flows according to the securitization's structure. Typically, start with senior tranches and work down the capital structure. Account for any triggers that might change the distribution of cash flows. Calculate tranche performance. Determine the cash flows received by each tranche. Calculate key metrics like yield, average life, and duration for each tranche. Incorporate structural features. Model the impact of credit enhancements like over-collateralization and excess spread. Account for any reserve accounts or liquidity facilities. Stress testing. Run the model under various stress scenarios, e.g., increased defaults, changes in prepayment speeds. Analyze how different tranches perform under stress. Sensitivity analysis. Vary key inputs to understand how sensitive the model is to changes in assumptions. Reporting. Generate reports showing cash flows, tranche performance, and key metrics under various scenarios. Remember, the specific details of the model will depend on the type of assets being securitized and the structure of the deal. It's crucial to understand the underlying assets and the securitization structure thoroughly to create an accurate and useful cash flow model. Question 5. How would you stress test a securitization structure? Stress testing a securitization structure is essential to understand how it might perform under adverse conditions. Here's how you might approach it. Identify key risk factors. Determine the main factors that could negatively impact the performance of the underlying assets, e.g., economic downturn, industry-specific issues, regulatory changes. Develop stress scenarios. Create multiple scenarios of varying severity, including historical scenarios, e.g., 2008 financial crisis, hypothetical severe scenarios, regulatory stress scenarios, if applicable. Adjust model inputs. Modify key inputs in your cash flow model based on these stress scenarios. Increase default rates. Decrease recovery rates. Alter prepayment speeds. Adjust interest rates or other relevant economic factors. Run the cash flow model. Use your adjusted inputs to run the cash flow model for each stress scenario. Analyze tranche performance. Examine how each tranche performs under stress. Does it suffer any losses? How are its cash flows affected? Does it maintain its expected rating? Test structural features. Evaluate how structural features like credit enhancements perform under stress. Is over-collateralization depleted? How quickly is excess spread consumed? Are there any trigger events activated? Sensitivity analysis. Perform sensitivity analysis on key variables to identify tipping points where the structure starts to break down. Tail risk assessment. Consider extreme but plausible scenarios to understand potential tail risks. Combine stresses. Look at the impact of multiple stress factors occurring simultaneously. Compare to similar deals. Benchmark your stress test results against similar securitizations in the market. Document and report. Clearly document your stress testing methodology and results. Prepare reports highlighting key findings and potential vulnerabilities. Remember, the goal of stress testing is not just to see if the structure survives extreme scenarios, but to understand how it behaves under stress and where its vulnerabilities lie. This information is crucial for investors, issuers, and regulators in assessing and managing the risks associated with securitization structures. And there you have it. We've covered 5 key analytical questions you might encounter in a securitization interview. Remember, these concepts aren't just for acing interviews. They're fundamental to understanding and working with securitization in the real world. If you found this video helpful, please give it a thumbs up and subscribe to the 4 Credit Guys channel for more finance and credit-related content. We're always striving to bring you valuable insights and tips to help you succeed in your finance career. Do you have any questions about securitization or other finance topics you'd like us to cover? Let us know in the comments below. And don't forget to hit that notification bell so you never miss our latest uploads. Thanks for watching, and we'll see you in the next video.